Welcome to The Explainer. So you've probably heard it a million times, right? Crypto is anonymous money, a perfect digital hideout for untraceable funds. Well, today we're going to blow that myth right out of the water and get to the real story behind crypto privacy. And this idea, well, it's not exactly new. Right from the start, crypto got this reputation for being the go-to currency for shady stuff, like the whole infamous Silk Road marketplace. And that perception that it's the perfect tool for criminals, man, it has really stuck around. And it's fueling this huge ongoing debate. And that really is the billion-dollar question, isn't it? The answer? Well, it kicks off this incredible cat and mouse game. You've got privacy advocates on one side building these massive digital walls, and on the other, you've got financial investigators just showing up with even bigger ladders. All right, so let's really get into it. First things first, we've got to debunk the biggest myth out there about Bitcoin and a ton of other popular cryptocurrencies. And honestly, it all comes down to the way they're built from the ground up. And here's the first thing that just blows people's minds. These networks, they're actually built on radical transparency, not secrecy. Yeah, you heard that right. Just picture a giant global glass book where every single payment is written down for the whole world to see, and it's there forever. Okay, so this is the absolute key point. Crypto offers what's called pseudonymity, not true anonymity. What's the difference? Well, your real name isn't stamped on your transactions, but a kind of pen name is, and that's your wallet address. The best way to think about it is like you're wearing a mask, not an invisibility cloak. And that difference is it's absolutely critical. See, with true anonymity, there are zero clues. But with pseudonymity, you're leaving a trail of digital breadcrumbs everywhere. And here's the kicker. If anyone, can connect your wallet address to your real-world identity just one time, then poof, your entire financial history tied to that address becomes a completely open book. So how exactly does that mask get pulled off? Well, the number one way is through crypto exchanges, the places where you have to upload your driver's license or passport. That whole process is called KYC, Know Your Customer. And boom, that single action forges a direct link between your real name and your crypto addresses. But that's not all. Investigators are smart. They can also use your IP address or run this crazy sophisticated software that finds patterns in your spending habits. Or honestly, sometimes they just find a forum where you posted your address years ago. The dots are always there, just waiting to be connected. All right, so that was the problem. Now let's talk about the countermove. This whole situation basically lit a fire under developers. They saw this massive privacy gap and said, okay, we can fix this. And they got to work building a whole new set of tools to try and reclaim that anonymity everyone thought they had in the first place. So one of the first and most popular tools they came up with is something called a mixer, or sometimes a tumbler. The concept is actually pretty simple, but it's really effective. Imagine you and 100 other people throw your money into a giant pot. The service then stirs it all up like crazy and then sends the exact amount you put in to a brand new, clean address that you control. The whole point is to just snap that on-chain link, making it almost impossible to see where the money originally came from. And that was just the start. Some developers took it a massive step further. Instead of just building a tool on top of a transparent system, they decided to build privacy right into the very foundation of brand new cryptocurrencies. So, unlike Bitcoin, where, as we said, everything's public, you've got coins like Monero and Zcash. These things use some seriously advanced cryptography to hide pretty much everything. The sender, the receiver, even the amount, for every single transaction, right out of the box. Now, the tech behind something like Zcash is where things get almost magical. It's called a zero-knowledge proof, or ZKP for short. And this is a genuine cryptographic breakthrough. It lets the Zcash network prove that a transaction is totally valid, that the sender actually has the money and isn't trying to pull a fast one, all without revealing any of the sensitive details. It's like proving you have a key to a door without ever showing anyone the key itself. Mind-blowing, right? But of course, the story doesn't end there. Just as these privacy tools started getting really sophisticated, a whole new industry popped up with one goal: to break them. And this is what kicked off a full-blown technological arms race. Yeah, and this quote from Professor Suzanne Lynch just hits the nail on the head. For every new privacy technique someone comes up with, a new forensic technique pops up to counter it. I mean, the whole field of blockchain forensics has absolutely exploded over the last few years, and they've turned that transparent public ledger we talked about into an incredibly powerful tool for investigators. So these forensic firms have this incredibly powerful software that just scours the blockchain 24/7, looking for patterns and following the money. A classic move is to just trace the funds hop by hop until they land at an exchange. And once they're there, well, law enforcement can just serve a subpoena and get the user's real identity. They even use these really clever, kind of sneaky methods like dusting attacks, where they send these teeny tiny, almost worthless amounts of crypto to thousands of addresses just to see where they go and link them all to one owner. So you can see how this isn't just a tech thing anymore. This whole arms race has now completely spilled out of the digital world. It's now being fought in courtrooms and inside regulatory agencies all over the globe, and it's created this incredibly complex and frankly messy new legal battleground. And if you look at this timeline, you can see a really clear pattern of things just escalating. It all kind of started back in 2013 with the Silk Road takedown, which was the first big moment everyone realized, whoa, Bitcoin is traceable. Then you fast forward to 2022, and the US Treasury does something nobody thought they'd do. They sanctioned Tornado Cash. Not a person, not a company, but a piece of open source code. Things got even more intense in 2024 with the arrest of the Samurai Wallet founders. But we might be at a turning point. A very recent DOJ memo seems to signal a huge potential shift in strategy, moving away from what people call regulation by prosecution. So yeah, the landscape here is changing incredibly fast. And this really gets us to the core conflict, the fundamental tension at the heart of this entire debate. On one side, you have this deep-seated belief in the right to financial privacy. For a lot of people, that's a non-negotiable value. But on the other side, you've got governments who say they need auditability, they need transparency to fight crime and keep the whole financial system from collapsing. And if you thought that was complicated, it gets even messier when you throw modern data privacy laws into the mix. Take Europe's GDPR, for example. It gives every citizen the right to be forgotten, meaning you can ask a company to just delete your data. So how on earth does that square with a blockchain, a technology that by its very nature is designed to be permanent and to never, ever forget anything? And that's really the bottom line, isn't it? This isn't just some tech debate. It's about our values. The digital money we create is going to reflect the kind of society we build. So the final question, it's not just for the developers or the people in government, it's for all of us. In the financial future we're heading towards, what do we value more, the private wall or the public ledger?